Ladies and gentlemen, good day and welcome to the EID Parry India Q1FY26 earnings conference call hosted by DAM Capital Advisors Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star, then zero on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Sanjay Manyal. Thank you, and over to you, sir.
Hello everyone, and a warm welcome on behalf of DAM Capital to the Q1FY26 earnings call of EID Parry India Limited. We thank EID Parry's management for giving us an opportunity to host this call. On the call today, we have Mr. Murugappa, Whole-time Director, and other senior management team of EID Parry. I hand over the call to the management for opening remarks, followed by a question-answer session. Thank you, and over to you, sir.
Thanks, Sanjay, and very good morning to everyone. It gives me a great pleasure to be a part of this analyst call and to share some updates on both the global as well as the Indian scenario and explain the Q1 performance of the company. You will also note that our quarterly investor presentation has been uploaded online post our board meeting yesterday. I'll start with the global scenario. The global sugar market is projected to remain in mild surplus through the sugar year 25-26, primarily due to increased production in Brazil, India, and Thailand. Favorable weather has supported higher output in India and Thailand, while Brazil continues to crush aggressively with a sugar mix of above 52%, despite dry conditions affecting cane quality. However, risks to Brazilian output persist due to lower cane yields, declining ATR, and weak sugar prices, which may prompt a shift towards ethanol production. According to Zarnico, the market is still oversupplied by approximately 2 million metric tons of raw sugar and 1.1 million metric tons of white sugar in 2025, with an additional 1.2 million metric tons of white sugar surplus expected in the first half of 2026. This has driven raw sugar prices down from 21.5 cents per pound in February to about 16 cents per pound at present. The white premium remains uncertain, with refiners needing $100 per metric ton to remain viable, suggesting a necessary range of $80 to $100 per metric ton to incentivize supplies. EU sugar output is expected to decline, while demand from key destination markets such as China, Indonesia, and Bangladesh have softened. With prices trading near ethanol parity, any further shift in Brazil's mix towards ethanol would help stabilize the market. Strategic policy decisions and production responses will be key to rebalancing global fundamentals. I'll now move to the Indian scenario. As of mid-July, India's sugar production stands at 25.7 million metric tons, with 14 mills still operational. Early season yields were impacted by adverse weather, but improved recoveries on the back half of the season have supported output. Pre-monsoon rainfall, which largely occurs during the months of March to May 2025, was 42% above normal, significantly affecting cane growing states positively. Maharashtra, Karnataka, and Tamil Nadu all recorded surplus across major districts. Domestic consumption is projected to be 27.9 million metric tons, with 0.6 million metric tons expected to be exported from the 1 million ton quota which was provided. 3.4 million metric tons is the expected diversion towards ethanol. Estimated closing stocks are in the range of 5.5 million metric tons, roughly 2.5 months of demand. Most states have seen a decline in sugar output, with Maharashtra and UP showing the largest drops in absolute terms. State-wise, UP leads with 9.24 million metric tons, followed by Maharashtra at 8.09, and Karnataka at 4.5 million metric tons, and Tamil Nadu at 0.5 as of mid-July. Key factors to monitor going forward will really be how the cane crop pans out in the upcoming sugar season. The good monsoon spells are encouraging on this front. Also, developments on the ethanol blending program, particularly on ethanol pricing, as well as outcomes of India-US trade talks, and any bearings this might have on the ethanol and sugar sector will also need to be monitored. I now hand over to our CFO, Mr. Venkateshwarlu, to take you through the operating performance of the company in Q1.
Thank you, Muthu. Good morning to all participants. It's a great pleasure to be part of the analyst call and to share the key information of the operational and financial performance of the company. I would like to share with you the key operating parameters of each segment. So as far as the sugar operations is concerned, we have crushed the Tamil Nadu plants and about 63 days, average 64 days we have crushed during the quarter one. So I would like to share the quantitative details as under. The Q1 we crushed about 2,11,000 metric tons when compared to the corresponding quarter of the previous year was 1.93 lakh metric tons. Recoveries were under pressure because the recoveries for the current quarter is 8.02% against the 8.6% of the corresponding quarter of the previous year. We produced sugar about 17,000 metric tons during this quarter and against the 16,000 metric tons of corresponding quarter of the previous year. So cane cost is about 3,844 rupees per metric ton against 3,491 rupees per metric ton of the corresponding quarter of the previous year. This is mainly on account of the FRP impact which was declared by the central government from the 3,150 rupees to the 3,400 rupees per metric ton. As far as the sugar sales volume is concerned, sugar sales volume for the current quarter is 84,000 metric tons. This is completely driven by the domestic sale. There is no export quota available to us. Whatever the quota was available, we already exported. The corresponding quarter of the previous year was 1.05 lakhs metric tons. So the previous corresponding quarter also we were completely domestic. That was about 6.05 lakhs metric tons. The reduction is mainly on account of the lower release order quota which is given by the DFPD. As far as the sugar selling price is concerned, average selling price overall is 41 rupees 99 paisa against the previous year's corresponding quarter of this 38 rupees 60 paisa. We are carrying about 1.2 lakhs metric tons of sugar as at June 25 and we are valued at average at 37 rupees. So as far as the segment revenue is concerned, sugar revenue for the current quarter is about 347 crores as against 404 crores of the corresponding quarter of the previous year, registering a decline about 14% on a lowest release quota. So consumer product group, the consumer product group delivered a turnover of about 192 crores for the current quarter, registering a decline of 11% over the corresponding quarter of the previous year of 216 crores, mainly on account of lower release quota for the sweetener category, partly offset by steady performance in the staple segment which is registered a growth 33% over the corresponding quarter of the previous year. The cogen, as far as the cogen is concerned, power generated during the quarter one about 221 lakhs units as against 307 lakhs units in the corresponding quarter of the previous year. We have exported about 122 lakhs units against the 170 lakhs units in the corresponding quarter of the previous year. Average power tariff for the current quarter is 3.67 rupees per unit as against 4.23 per unit in the corresponding quarter of the previous year. So revenue for the quarter is about 7.53 crores as against the previous year 11.94 crores in the corresponding quarter of the previous year. As far as the distillery is concerned, we have sold about 413 lakhs liters against the previous corresponding quarter 390 lakhs liters, of which ENA is 153 lakhs liters and ethanol was 260 lakhs liters. As far as the relations is concerned, 67 rupees 59 paisa per liter against corresponding quarter of the previous year's realization was 64 rupees 31 paisa. Revenues were 296 crores compared to the 263 crores during the corresponding quarter of the previous year. As far as the nutraceutical segment is concerned, as far as the Indian operation is concerned, we have done about 5.94 crores the turnover against 8.41 crores in the corresponding quarter of the previous year. At the consolidated level, Nutra business turnover is about 27 crores as against 59 crores in the corresponding quarter of the previous year. As far as the refinery operation is concerned, the operational revenue is about this quarter is 908 crores against the 1,213 crores corresponding previous year quarter. As far as the PBT is concerned, good story because we made a positive PBT of 67 lakhs against the loss of 6.79 crores. Sugar production is about 2.25 lakhs metric tons against 1.6 lakhs metric tons in the previous year quarter. Refined sugar sales is about 2.02 lakhs metric tons against previous year quarter of 2.23 lakhs metric tons. So, as far as the loans is concerned, there is no long-term loans which is repaid to parent company about 200 crores. And as far as the short-term loans, external loans is concerned, against 461 crores. Against the Q1 of 24-25 is about 220 crores. So these are the operations of the Q1. Now the floor is open for the questions.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Rajesh Majumdar from B&K Securities. Please go ahead.
Yeah, good morning, everyone. And thanks for a very detailed presentation this time, where you've uploaded the presentation. So I had a few questions. The first question was on the consumer product group, the sweetener category. So how do we read into the volumes of the consumer part of this business, as in the entire sales is quota driven? So if we are not able to grow our sugar volumes over the next few years, will the consumer part as a proportion of the sweetener category can it be theoretically 100% or what percent, or do you have to sell some raw sugar as well? How do we read this? That was my first question.
Yeah. So Rajesh, hi. Good morning. Yes,
Morning.
it is quota driven. So we'll have to do a couple of things on the sweetener side. Of course, focus on sales of value-added product from the sweetener segment. Launch new products, expand the product portfolio. That is on the anvil as well. We will also make tactical calls to take in more quota. We also have to now feed an institutional market wherein we have to sort of balance overall pricing as well. So we'll take some of those tactical calls going forward. So those are opportunities for sales to grow in the sweetener part of the CPG segment. There's also I would say the last point I would like to make here is you could also have traded volumes wherein which you would obviously, based on the right quality control, have other mills packed for you. That's something which will also be being explored. It needs to be done at the right economics. So there are opportunities to take this up. We will be tactical about it.
So theoretically, it can move up to whatever percentage of the overall quota, the consumer part of the business.
Yeah, it can move up. It's about the tactical choices that we make. I mean, one theme of Q1 is to, obviously, we've got distribution which we're expanding, and we wanted to, within our current quota, we wanted to take the attractive business, and we've actually jettisoned some of that very low value business wherein discounting factors are high, so on and so forth. So we made some conscious calls in Q1.
Yeah. My second question, sir, was on the refinery segment. While we have closed down some step-down subsidiary in the UAE, which was into exports, we are also committing more capital in terms of the business. So what's really going on here in terms of the refinery business? I would like to know.
So yeah, I can come in on this, Rajesh. So I think there's, as you know, the refinery business, there is a lot of debt, and then this capital has really gone in for debt reduction and in order to strengthen the operations of the refinery, and I think that's why we've had these infusions.
What about the closure of the step-down sub, which was into exports into you? What is it indicating?
No, so we didn't find that of any strategic significance to the refinery operations. I think we are happy with the standalone operations here in Kakinada, and we'd like to remain focused on that.
Okay. And sir, we've seen a sharp increase in the short-term debt in a quarter where normally 1Q and 2Q we see the short-term debt coming down, and then probably it goes up when the sugar crushing starts in 3Q and 4Q. But in 1Q we've seen a sharp increase in the short-term debt, so that is a bit alarming. I mean, any reason why that has happened, and how should we read that going forward?
Venkat, you can cover.
Rajesh, if you look at the short-term debt, this is not only relating to the crushing, and also we have started sourcing the molasses from the other states, because keeping in view since we increased the distillery capacities in the last year, so we need a molasses over and above what we are going to crush it. So those are all the molasses we have done a forward contract, and some of the places we already sourced the molasses. That is one of the reasons. Second reason also, you have to look at it, our CPG business is growing on, and our receivables also is slightly going up in line with the turnover and in line with the industry standards. Thereby, our working capital requirement is going up. So thereby, correspondingly, your short-term debt is going up.
That means the overall short-term debt for the end of the year will be even higher when the actual crushing happens.
More or less, it will be the same levels, Rajesh, because if you look at it, today you are looking at about 1,100 crores or something. Even at the year end also, we will be looking at the same. Because if you look at it, most of the crushing will get closed by the February or somewhere. So the H&T payments and all the things will be already we have given the advances. So that will be offset against the advances what we have given.
And so if I could seek in a last question, this is from Muthu sir. We have 56% stake in Coromandel, and the Coromandel stock is now at 52-week high. So can we contemplate some stake sale, because technically it can come down to 51% and still retain a majority holding to reduce our debt? Yeah. Thank you.
So Rajesh, I think we're really focused on the standalone business here. I think these are broader conversations which are more sort of board and group level, and I think we should stay focused on the standalone operations here.
Thank you.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. The next question is from the line of Vaishnavi Gurung from Craving Alpha Wealth Fund. Please go ahead.
Good morning, sir. Thank you for taking my question. Just one question from my side.
Ms. Vaishnavi, can you speak a little louder?
Hello, is it better?
Yes, much better.
Yeah. So my question was regarding the revenue from nutrient and allied business. The revenue is significantly up compared to last June quarters. So just wanted to know any specific reason for that?
No, the Nutra business revenue is actually lower.
Muthu, I think she is asking about the Coromandel from the consolidated.
Okay. So
yes,
yeah, I think that the consolidated is we consolidate Coromandel International. We can't comment on their results. I think their board and earnings call has already concluded. They've had a good first quarter, but you may want to look up publicly available data to go over their results.
Okay. So my second question was if any capacity expansion plans we have.
Not at present. We've just finished up last year our ethanol capex. So capex cycle is largely concluded. It's a phase of consolidation right now.
Okay, that's it from my side. Thank you, sir.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. The next question is from the line of Sanjay Manyal from DAM Capital. Please go ahead.
Hi, sir. I have just a few questions specifically regarding good monsoon and what kind of a crushing is expected in Karnataka and some of the southern states, and what is our plan over here to increase the crushing in the next season? What is the expectation on that side?
Monsoon has been good in the states of Karnataka and Maharashtra also. Overall, the industry is looking for a good crop this year. Our internal data also is showing robust situation. So we would expect marginal positive upside in Karnataka crushing this year as compared to last year. TN will be largely neutral. There's a lot of action we are doing in terms of reviving TN, but being an agri crop, it might take 1 or 2 cycles. But overall, we have a positive outlook on crushing for the year.
Right. So and on our peak utilization of our distillery capacity, what kind of ethanol or ethanol/ENA we can sell? What would be our sort of optimum revenue from distillery segment?
Our overall capacity is about 18 crore liters across all our facilities. The choice of the product mix varies depending on the margins we will make. So we actively look at the product portfolio and keep changing it as the situation develops, depending on the pricing in the market. Obviously, ethanol pricing is relatively stable given the government decisions. The ENA is the option we keep evaluating. It's a revenue mix management approach. But the full capacity is about 18 crore liters is what we'll be able to do in a year. And the capacity utilization will be about 90 to 95% steady state, provided there are no outliers that hit us from a policy perspective.
And given the fact that now there is a lot of talk about increasing the ethanol blending from 20 to 25% or 27%, that's what we hear in a lot of discussion from the government side. So is there any plan again to sort of further increase our capacity over here? And what are the discussions with the government happening on this ethanol blending part? Is there any roadmap for that which they have decided?
Obviously, if they have decided, it will be in the public domain, but we would presume the government is seized of the situation given the news that we read. The direction the government has been taking on the EBP program is highly appreciable. They seem to be steering the industry and the usage of ethanol in the right direction. So we remain positive about the government's approach on the issue. I may not be able to comment on what is the internal discussions that the government is currently doing because we would not have visibility on that.
So, Sanjay, just to add to Ashik's point on capacity expansion, we don't have any plans for expansion. I think we'll have to wait to see how policy pans out. If at all there's something we might consider, it might be, we have one dual feed distillery. We might consider repurposing one or two of our other distilleries to, operate on both grain as well as molasses-based feedstock. This is perhaps something we might consider. But this is again subject to, obtaining policy clarity and subject to sort of further internal evaluation.
Right. So just on this part, how are our margins in the separate grain part as well as in molasses, which is better feedstock as of now? And also, there has not been any increase on the ethanol prices from last 2 years. Is there any clarity on that, at least on the sugarcane based feedstocks, if there is a possibility of any ethanol price hike?
On margins, obviously, we would not want to comment between the feedstocks, but right now both maize and molasses are profitable. In terms of what was the second question? I'm sorry.
So about the ethanol price hike has not taken place in last 2 years. So is there again any discussion on that or any possibility of that?
There is a lot of representation we've been doing to the government on ethanol pricing. We would actually look forward to some action on that front. Yes, it's concerning for us that the last 3 years we have not had a price increase. The FRP of cane, which is our feedstock, keeps increasing year on year. That should take care of the farmers, and rightly so. So we would look forward to some positive news on the ethanol pricing, but that rests with the government.
Right, sir. Right, sir. That's all from my side, sir. Thank you. Thank you very much.
Thank you. A reminder to all participants to press star and 1 to ask a question. Ladies and gentlemen, let's wait for a moment while the question queue assembles. The next question is from the line of Ritvik Seth from One Up Financial. Please go ahead.
Hi, good morning, sir. So just one question from my end on the consumer product division. If you can throw some light on the strategy for the consumer product division going forward. We've built a decent base in the last 4 to 6 quarters. How to look at the sweetener category you mentioned earlier and the staples category in the next 3 years. If you can just throw some strategy on that.
Yeah, morning, Ritvik. This is Balaji. I head the consumer product business. So, in terms of the non-sweetener part of the business, we will continue to stay focused on driving distribution and increasing our brand equity through brand spend. In terms of sweetener, the focus is largely on the value-added browns category, where we are seeing a potential opportunity to grow. And most of the expansion and growth will come in largely on the browns category for the sweetener. For the non-sweetener, it will be the continued focus on distribution and brand building for the next few quarters. There is some work happening on the development of new products, which will come into the food spaces. But as of now, those are all rudimentary and developmental in nature, and we will come back to you as and when we are ready with those.
Mr. Ritvik?
Yeah, and sir,
Mr. Ritvik, can you be a little louder? We can't hear you properly.
Yeah, is this better?
Yes, much better.
Yeah, much better.
Yeah, sorry. So, and on the distribution part, I believe we are around 2 lakh currently. In the next 3 years, what kind of distribution reach we are targeting, and are we looking to add more SKUs in the staples category?
Yeah, so as part of the growth strategy, we would be growing and expanding the distribution. We cannot put a number to it at this point in time, but we would definitely be focusing on numerical distribution, growing and expanding for us. In terms of SKUs, all growth will come in with the addition of new SKUs when you are launching new products and in existing products. We will be coming up with SKUs more from a consumer perspective as and when there is a need which arises. The plans are afoot to grow in this business.
Okay. And safe to assume that sweetener category will be quota driven going forward, and will be, you mentioned, we'll be focusing on the higher value added, which will be the browns category, right?
So yes, I think Mr. Murugappan answered this question earlier. The quota is going to be a limiting factor on the sweetener sales, but we have our ways and means of moving around on this. One is by focusing on the browns category, which are not driven by the quota so much. The second is that there is always an opportunity to buy and brand sugar, which is something that we will consider as we go forward when we feel that the quotas are restricting us in terms of our growth.
And over a 3-year period, sir, would you like to give any aspirations? We are currently around 800-900 crores on an annual basis, sweetener and staples category combined. What would be a reasonable growth assumption for the next years? Would you have anything on this?
We won't have a number at this point in time, but I think we will be growing pretty aggressively in this category, and our expansion plans will include consolidating ourselves largely in the modern trade, e-commerce, and the general trade channels.
Okay, sir. All the best, and thank you.
Thank you.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. The next question is from the line of Vaishnavi Gurung from Craving Alpha Wealth Fund. Please go ahead.
Hi, sir. My question is on the future outlook. How do we see our position for 2030? Do we plan to be more inclined towards agri or energy sector?
So, Vaishnavi, thanks for your question. I think the focus on the biofuels and bioenergy space will continue. Of course, it's ethanol and it's a consolidation phase right now. We'll have to see, how policy pans out. There's also seemingly an opportunity in sustainable aviation fuel, which is being spoken about, but it's very, very early days. And it's an opportunity which is being spoken about using this ecosystem. But we'll have to really wait and watch as to how the policy framework pans out. So one area of focus will be this space. The other area of focus, of course, is the consumer product group, which we've spoken about just in today's discussions as well. And that is a business which will really take a separate path to the biofuel and bioenergy business. So I think these are the two areas of focus of the company going forward.
Thank you, sir.
Thank you. A reminder to all participants, you may press star and 1 to ask a question. Let's wait for a moment while the question queue assembles. As there are no further questions from the participants, I now hand the conference over to the management for closing comments.
Thank you. And thank you all for logging into our Q1 earnings call today. We wish you the best and hope to see you at the next quarter earnings call. Thank you and all the best.
On behalf of DAM Capital Advisors Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your line.